Okay, welcome to the third trading lesson. Let me apologize. I'm absolutely terrible at keeping a schedule. So I'm going to try from now on to put together some kind of schedule release on these trading videos so you guys will know when to expect the next one, the next one, the next one. Today I'm going to try to get through about 4 of these. It's because we're a little behind, probably about a week or so. So I'm going to try to get through about 4 of these trading videos a day. So keep your eye out for them. This first one here is going to be on moving averages. Now, I'm going to attempt to keep this really simple because, like I said, this is a beginning trader's course, okay? This is not for sophisticated traders or people that have been trading for some time. This is just for people who wanted to know, with all these lines and candlesticks mean on a chart, how to read them and how to put together a very simple trading strategy. So you can open an account for $50 on something like TD Ameritrade, and I don't know, maybe get up to about $500 or so, throwing a little money in, and then actually start trading. So you can, wherever you work, whether you are a nurse or whether you work at Burger King, if you can come in and sit down in that chair and pull out a couple extra $100, it doesn't matter, 75, 50, 200 dollars, just imagine that you could generate every week or every month in addition to your regular paycheck. So that's what this is for. So I am not going to get into a bunch of different trading strategies in this course. I'm not trying to overwhelm you guys. Okay, this is the keep it simple stupid way of trading. Okay, you can call it the KISS method. This is no big secret. This is not some strategy that I invented, like I told you before, some secret strategy that I'm going to share. This is one of the most basic trading strategies. And I've found through winning money and losing money, okay, and blowing up at least 2 or 3 accounts, which traders do when you're learning to trade. Blowing up an account means you've maxed it out. Like, that's it. Okay, you came in with this amount of money and now the account's empty and you need to start again from scratch. That's called blowing up your account. So I've found that this is the easiest method for trading, and this is the method of trading that I found the most success with, the most consistent success with. So I'm just going to teach it to you. But before I teach you this strategy, like I said, we have to go over some basics. We've already covered tools you need to be tools you need to be a day trader. We went over that, everything from your monitors to your computer to the software you need to use, that sort of thing. Okay, chat rooms. Then we went into the analysis of a candlestick. So what we're talking about here, between sell candles and buy candles and that sort of thing. So you got that. And then I did a little update to that as a quick thought on candlesticks, something I forgot to cover with you guys. And now we're going to go into a quick overview of moving averages. And the next video will be on the VWAP, which I'm going to try to get out 5 minutes after I finish this one. So we're just going to keep rolling along, and I'm going to get into this trading strategy, and that's going to do it. And then you can ask me any questions you want in the comments. And videos after that, we are going to take live trades starting in a couple weeks. We're going to take, I'm going to show you how Thinkorswim works with their on-demand program. We're going to go in there and fiddle with a couple days, since you can run back to market and you can watch it play out. Like when I showed you the how candlesticks were moving, how they move about 2 weeks ago, we were using on-demand. We ran back a day in the market and we just let it play. We just hit play and let the day run through. So that's what I'm talking about. There's no excuse. There's no reason why you can't learn to trade. Trading is not, to say trading is not hard. It's not hard, but the discipline to learn to trade right is hard. The discipline, because you're dealing with real money now. That's the problem. Everything's easy and everything's fun when you're just in there fooling around with paper money. But when you're actually live and you're actually trading with your hard-earned money, and you watch $100 go in 5 seconds because you're in a trade the wrong way, you'd be surprised how your emotions will come into play and how It is amazing. It is amazing. And the discipline to not blow up your account or jump right back in, or I don't know, put your fist through the screen, or stomp your computer to pieces. I've been to all those things. I don't think there's a trader alive that doesn't have multiple items that they broke around the house learning to trade. I still have we have one of those little waste baskets down there with the remote control lid. You know, the one you wave your hand over and the lid pops up. That has a huge dent in the side of it. When I had an account with Lightspeed and lost $4,000 in like 4 days over something like just trouble with the hotkeys. Lightspeed was on the phone trying to help me out, blah, blah, program the hotkeys. Hotkeys didn't work. Couldn't get out the trade. I remember that I went ballistic that morning. I mean, you just lose it, but it's just learning how to, that's what I'm talking about. So by the time you get all that crap out of your system, if you still want to trade, you're still alive, and you haven't burned down your house or stomped your computer system to death, then you can now trade effectively. So we're going to go over moving averages, real quick overview. I was going to try to keep these videos to 5 minutes, but we're already at 6, and I think these videos are going to be about 20 minutes. And that's just kind of, it seems the way it's going to be. So, okay, here we go. All right, for moving averages, for starters, what is a moving average? Okay, moving average are these squiggly lines you're looking at here. This red one, this blue one, this yellow one, this purple one. Now, the color of these, now this software, let me just start from the beginning. This is charting software, as you see here. This is charting software. We discussed charting software, and this one is TC2000. Let me see if I can see the name. Hang on for a minute. There you go. Okay, the name's up here in the corner. As you can see, this is TC2000. I think I paid them something like $18.95 a month or something, $19.95 or $29.95. Either way, as a trader, I paid off the whole year in advance, so you know they give you a discount, blah, 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 blah. Okay, but anyway, you can do anything you want with these moving averages. You can change this to green, blue, yellow, whatever suits you. And as you can see up here, this one says the 9. This is the 50. This is the 200. So you know what each of these are. This is the legend, you see? And I can change these to look any way I want. I mean, I could go under here. There we go, see? With the color, look at that. I can change, okay. So most charting softwares work the same way. Look at this. You can change the width, the style of the line, blah, blah, blah. You can change the type of moving average. And as you can see here, well, we really opened up a can here. We're only going to discuss 2 here. Simple and exponential are the only 2 moving averages we care about. Simple and exponential. And I'm going to get into that real quick. So don't even pay any mind to front weighted and Hall. To tell you the truth, I've never used either one of these, and I have no idea what they mean. So I'm not even going to waste your time with that, and neither have I found it necessary to know. You know, you're going to find when you trade that you're going to find your own style of trading, and you do not need to understand everything there is to know about the market. Like you have to go to school and become some kind of broker where you understand every little nuance of the market and blah, blah, blah. No, you don't. All you have to do is understand what you're doing. It's like the old joke where the person approaches or the woman approaches the guy on the street. She asks him if he knows how to get to so forth and so on. And he says, no, I don't know how to do that. Do you know how to get to so forth and so on street? No, I don't know how to do that. Do you know how to blah, blah, blah? Well, no. Well, you don't know anything. Well, I know where I'm going. There you go. Okay, so all you need to do is know where you're going. Okay, so you know the stock you're trading, you know how that stock moves, and you know what strategy works for you. That's all you need to know. Okay, you don't have to be some master of the market, you know, like those gurus you see on TV trying to sell you those jacked up, you know, my trading secrets for so forth, how I made $1 million. Come on now, really? Okay, with the yacht and the car and that's bullshit. Okay, so all right, here we go. We're going to deal with simple and exponential moving averages. Now, all you need to understand about moving averages, do not let this chart scare you. Do not let these little lines scare you. All these lines represent is historical price action. In other words, it's an average moving average. You're that moving average. It is an average of where the price has been over a period of time. That's all these reflect. Okay? That's it. So 9 would be 9 days, 50 would be 50 days, 100 would be 100 days, 200 would be 200 days, okay? Average of where the price action has been. Okay, you got that? Simple. And here's, interestingly enough, when I tell you this next part after we get through the two kinds of moving averages, and you find out there's only 3 ways that you're going to use a moving average to trade. That's it. And you're going to be like, oh, wow, that was easy. Okay, so take a deep breath, digest what I just told you. Historical price action. That's all this is. This is an average, okay, of historical price action, okay, over a certain number of days. Okay, like I said, by historical, that's what I mean, over a certain number of days, okay? And this is the average of where the price has been, okay? All right, that's simple. Now, when I day trade, you're going to deal with 2 charts, and 2 charts only. Okay, this is what you care about. You care about your daily chart. Okay, and let me shrink these a little bit. Now, what do I mean by daily chart? I mean just that. This is the chart of the day. Each one of these candles represents 1 day of price action. Okay. All right, like if you were to count this up, this is probably like last Wednesday or something. This would be Thursday. No, actually, because there's nothing on the weekend. So, right, this would be like what did I say? Thursday, Friday. I don't know. Monday, Tuesday, Wednesday, Thursday, Friday, Monday, Tuesday. See what I mean? So okay, so each one is 1 day. Okay, intraday. Intraday is anything going on that day. And we day trade on the 1 minute chart. So look at this. Here's our minute. You can make a 2 minute chart. Each one of these candlesticks will represent 2 minutes. So every 2 minutes, another one of these candlesticks will start to form. You can make a 5 minute chart. Each one of these candlesticks represents 5 minutes. You get what I'm saying? Okay, starting to make sense to you? Okay, now, the reason I said that is we're on the intraday chart now. This is the 1 minute chart. Here's the daily chart. Okay, now I said that to say when it comes to moving averages, I use 2 different kinds of moving averages. For the daily chart, since each one of these since each one of these candlesticks represents 1 day, I use a simple moving average. Now, why do I use a simple? Why do I program this with a simple moving average? As you see, it just says moving average. See, moving average, moving average, moving average. If you look at the intraday, it says exponential moving average. Exponential, exponential, exponential. Why do I do that? Okay. Well, the simple moving average, okay, averages the price of historical data. Okay, it gives an equal weighted amount to all this historical data. Okay, all of it is weighed at exactly the same. In other words, okay, let me see if I can explain it better this way. The exponential moving average takes into account more current price action. Okay, just the more current price action. Okay, not price action. They're not weighing price action from, let's say, okay, perfect example. Let's suppose Tesla. Let's just pick a stock, okay? Tesla, for instance, okay. Elon Musk, okay, when Elon Musk was the CEO of Tesla, okay, the price action performed a particular way. Okay, when Elon Musk stepped down as CEO, and I remember that day when that news hit, you saw a change in the market. The price action changed. If I'm not mistaken, the stock price started to drop tremendously. Now, considering we're looking at daily candlesticks here, and I'm using simple moving averages. The moving averages are actually averaging all of that. Okay, it's averaging an average of all of that price action, okay, from way back, okay, from, you know, when this guy was removed or blah, 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 when he stepped down, blah, blah. It's giving weight to all of that. That is okay because as a day trader, I'm not swing trading or something. Swing trading, I'd primarily be using something like this daily chart. But as a day trader, I'm worried about the intraday chart. Okay, so when I'm looking at the intraday chart, I only want the most current. I want this thing measuring, giving more weight to the most current price action. So I might not want data that was, say, calculated from like, you know, given an average of data calculated from like months ago. Just give me an average of the most current price action. And it follows, and what's interesting about that is that the moving averages will follow this price action more closely, okay, than a simple moving average would, okay, if that makes any sense. In other words, I'm trying to think of it like, okay, all right, how's this? And me trying to explain moving averages is like me trying to give somebody directions. I'm terrible at directions, so I'm trying to really give this to you guys in a way as new traders that you'll get it. I want you to think of this as a pair of binoculars, okay? When you look through binoculars and they're blurry, and you start to adjust them, okay? Adjust. The sharper the image becomes, as I'm really narrowing it down, the sharper the image becomes, that's your exponential moving average, okay? You're really zeroing in, okay? Which is good because I'm in intraday trading. I'm trading on intraday charts. Sometimes I'm in and out of trades in a matter of minutes, okay? This is what I want. I don't want to use a moving average that's taking into account historical data that I really don't need to be bothered with. So I don't need that kind of analysis or average of price action. I don't need it. I just need the most current stuff. So this is why I use the exponential on the intraday chart and the simple moving averages on the daily chart. Because the daily chart, I'm just pulling up the daily chart in the morning just to glance at it. As you can see here, just to see which way the price action's heading, blah, blah, blah. That's it. I'm done with that. Now I'm over here. This is what I'm going to be trading off of. Okay, so zero in. Let me take my binoculars and really zero in on this price action and see exactly if these things are the average of where the price, the most current data, okay? So there you go. And that would be simple and exponential moving averages. And this was just the way I was taught, okay? So when you're setting up your charts to day trade, you're going to need two charts. You're going to need your daily chart and you're going to need your intraday chart, okay? And we trade on the 1 minute time frame. So you're looking for a daily chart. You're going to set up a daily chart. I'm going to show you how to do all that. Okay, that'll be another lesson. So you got to do all that. And then you're going to set up your intraday chart, your 1 minute chart. So your daily and your 1 minute. You're going to put your simple moving average on your daily chart because we don't need, it's okay that it's giving us a more average view of longer historical data and giving equal weight to all of that. That's fine. Intraday chart, I want to really zero in on my binoculars. I want a sharper view. I want to really see. I care about the most current stuff, the most current the most current price action. Okay, so there you go. Those are moving averages. Okay, and I'm going to tell you now, since we are on moving averages, when I use moving averages, this is just the way I was taught. And this is the way I find, and you'll find that according to who you learn from, you have some traders that they favor certain time frames, the moving averages, okay? And I've changed my moving averages over the years since I began trading. I've changed moving averages several times to find ones that I found really worked better for me. Now, when you're talking about the industry, okay, you're talking about hedge fund managers, and you're talking about people that are in there trading with your money. They give a lot of weight to the 100-day moving average. Okay, and as you can see, I have the simple 100-day moving average on my daily chart, and I have the exponential 100-day moving average on the intraday chart. Okay, but either way, I have a 100-day moving average. Okay, so I have my 100, my 50, my 9, and my 200. Now, most people do not have a 200-day moving average on the 1-minute chart. Okay, and I think at the time when I put this here, I was probably still filling out strategies. This was back in the day. I think I might have. So that's why the 200 is still here. Generally speaking, when you're talking about your daily chart, what you have is you have the 9 on your daily, simple moving average, the 50, simple moving average, definitely the 100, simple moving average, and the 200, simple moving average on your daily chart. Those 4, you can write that down. Okay, when you start programming charts, you're going to want to put the 9, the 50, the 100, and the 200. Okay, there you go. For your intraday chart, the one where you're going to be taking your trades off of, you're going to want to put at a minimum, you're going to want to put the 9, the 50, and the 100. Exponential moving average. Okay, exponential for the intraday. Intraday meaning anything that day, the minute, 2 minute, 5 minute, 15 minute, hour. Those are all intraday charts, okay? Simple moving averages on your daily charts. And definitely these 4, the 9, the 50, the 100, and the 200, okay? And these are, and I'm going to tell you now, could you program these for just about, yeah, you could. You could get in here and you could change these moving averages. Let's just click on one. See, edit chart properties. Let me see. I think I just had it. Give me a second here. It should be an edit plot. Okay. Let's go and edit chart properties. Let's get into this moving average. Okay, I'm going to show you an example. Okay, 100. Here we go. Right back where we started. Look at this. See, 99, 98, 97, 95. Look at this. I could change this moving average to be anything. Now, notice what's happening here. Look at this. Look at this. Wait a minute. Ah, shoot. Let me move it out the way so you guys can see this. Okay, watch this. Watch what happens to this moving average line. Look at this. I'm changing the number of days of the price action. Look at this. Look at it moving. See it moving? Look at that. Because, okay, what it's calculating here, look at that. Look, I'm changing that. You see? So you can set these for anything. But I'm going to tell you what most day traders utilize. They definitely utilize the 9. They utilize the 50. Okay? They utilize the 100. So they'll know what the big boys are doing. Okay? And the 200 on the daily. And then on the intraday, definitely the 9, the 50, and the 100. Okay? Now, I'm going to close with this because we're coming up on 22 minutes. I'm going to close with this. Style of trading that I'm going to teach you only requires 3 things that you need to remember about the moving average. Okay? You're going to use these moving averages as an indicator when to enter a trade and when to exit a trade. And moving averages serve as support and resistance. Okay? When you are in a trade. Now, what do I mean by that? If this price action, let me see if I can find you an example here. Okay. All right. Okay, here's one. Okay, let's blow this up so you guys can see what I'm talking about. I want you to notice something here, and we're not going to get too complicated. All right. Here's the price action. This is pretty much called consolidation. Okay, we didn't have any breakout here. Price hadn't really moved in one direction or the other. It's just kind of straight across. Okay, pretty dead. Don't worry, we'll get into that. Okay, don't worry about it. Price dropped here. Remember what I told you about buy candles. Okay, they open on the bottom and they close on the top. And this was as high as the price got. So the price, this was the last candle. The next time the price started down here. It didn't break here. It started down here. It didn't go any lower. Why didn't it go any lower? Because the 50 moving average served as support. Meaning that the price hit here and bounced. The 50 moving average was strong enough that the price bounced. Look at that. And went all the way up. Okay? The price bounced off of the 50. Okay? It served as support. You look at this sell candle here. The 9 did not serve as support. The 9 wasn't strong enough. to contain this selling action. Okay, and it broke the price. Look at that. Remember, opened here. Okay, opened here, and then they sold it off and it crashed right through the 9. 9 wasn't strong enough. 50 might be strong enough. This price action could have continued all the way down, hit the 50 and bounced. Okay, and we would have saw that reflected either in this candle or in the next candle, but it didn't happen. Okay, this candle, since we're on the 1 minute chart, took 1 minute to form. It crashed to the 9, took 1 minute to form. This finished out, and then the next one started below the 9. Now that it's below the 9 could serve as resistance, meaning if buyers were to come in now and start buying this price up, it could bang its head off the 9 here, and the 9 could be strong resistance, and the price action could fail and drop back the other way. Okay, and I would like to find you a better chart with an example of that. Okay, let me pull down Twitter. Let me just close with this. Let me give you an idea. Let's pull Twitter down here. Okay, these charts are absolutely terrible because I'm on TC2000 and this is aftermarket hours. This light shaded area, this is aftermarket. So I'm trying to pull back days so you can see it. If I opened up on demand and actually went back a day, we could watch this take place. But you're going to see that well enough. Okay, so here's a perfect example. Okay, look at these flat buy candles. Okay, and then you have these sell candles. But look what happened here. Price action here didn't break the 9. It didn't take off. The 9 served as resistance here. Okay, so when the price came over and this candle opened up here, the 9 was resistance and it crashed. Okay, remember, these candles close on the bottom. They open here. This is where the price action started. Right here. It started right here. Straight across. See? It started right here. Started. 9's resistance. Boom. Think of the 9 as the ceiling. Think of moving averages as the ceiling when it's above you and the floor when it's below you. And when you're, so like here, okay, it's the floor when it's below you. Okay? Okay, this is what you're gambling on. That it's the floor when it's below you, and it's the ceiling when it's above you. So what you're looking at is either is it going to hold for support, or is it going to act as resistance? And traders are betting on this all day long. This is what they're betting on. Okay, you're looking into you're in these trades, and so for instance, okay, think about this. Imagine I'm making money. Okay, I'm in a trade. Let's imagine I'm making money. Okay, let's suppose I got in. Let's suppose I got in. I don't know, any one of these. Let me see. Okay, let's suppose I got in here. Okay, I get in here, and boom, this takes off, and I'm making money, and I'm up money. The first thing I got to think about is we're heading, as this candle's climbing. You remember I showed you how those candles are moving. It's climbing. I'm automatically thinking we're coming into the 9 moving average. Should I take some of this money? Should I take some profit off? Why? Should I even get out of this trade? Why? Because is this going to fail when it hits the 9? Is it going to fail? Is what you're wondering. Let me see if I can. Let me see. Let's pull over Facebook. Hang on. And I know this is getting long here. But anybody that understands this already, if you want to go, it's fine. We're coming up on 30 minutes. I'm going to wrap this up. But this is what you're looking at. Okay, so is it going to fail when it gets there? Or is it going to keep going? You know, now you look at something like this. None of these moving averages stopped it. As you can see, this candle got bought right up. It was this low in the buying action. It just bought it up. It just ripped through all the moving averages. So I'll show you better on candles. As you can see here with this 9, this candle here, the 9 actually did serve as support. It held here. It held the price action here. It did not crash through. It held the price action here. And then the price action was so great that the next one actually, look at that. Okay, it actually opened higher than where this candle closed. Look at this. And then the price continued. It went this low, but this is where it closed at. So literally this 9 acted as support. Okay, so that's the end of this video. Sorry it took 30 minutes to get through it. Anybody that understood it could just be like, okay, well, I got it. Okay, so that's all you really need to know. Okay, you're going to be looking at when to get in a trade. Okay, when to think about exiting a trade. This is what the moving averages are for that we're using. Okay, when to enter a trade, when to exit a trade, and support and resistance levels. That's it, support and resistance levels. That's what you have to realize, okay? Support and resistance levels. And then moving averages, okay, are averaging price over a certain amount of time, okay? That's it. All right. Next one should be shorter. We're just going to jump into VWAP real quick, and then I'm going to show you how to plot out a chart, and then I'm going to show you how to take a trade. And that's it. Okay, bye.